Hey, what's up guys? John here. No rate cuts for 2024. Is that possible? It seems like it. The new jobs report came out. They forecasted 180,000 jobs added. But the numbers that they present to us, 353,000 jobs have been added.
20 to 24 has kicked off with a bang.
U.S. economy gaining 350,000 jobs in the month of January, blowing past the street's expectations.
Meaning they're off by 100%. And when you listen to what Jerome Powell has told us over the last couple of years, his goal is to increase unemployment to draw down inflation. Well, when they're off on the jobs number is 100%, do you think they're going to be issuing a Fed pivot anytime soon? I don't think so. Instead, I think quite the opposite. But what's really shocking about this data is that every day I look to see what's going on in the economy, and I almost never see any headlines talking about massive jobs being added with large corporations. It's usually this company cut jobs by 5,000, this company cut jobs by 10,000 or 1,500. All of these companies are cutting jobs, yet the numbers are showing that the economy is booming. What's really going on? Well, I believe we're walking into a train wreck in the U.S. economy, and I think we're really walking into a really big problem that I'm going to break down in this video and show you what Sam Altman as well, the CEO of OpenAI, what he's saying is about to happen to America. Please hit the like button, YouTube will share this content to educate other people about what's going on in the U.S. economy, and if you'd like to fix your credit to position yourself what I believe is going to be a massive wealth transfer and a massive transfer of assets to likes which we've never before seen. So if you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to greatcreditfast.com. Click the link in the description just below this video to schedule a free strategy session for Monday. Take a look at this. So just in, the U.S. economy added a blockbuster 353,000 jobs in January, far exceeding expectations of 180,000. This is a really healthy economy. This lady is a reporter for the Washington Post. She says this is a very, very healthy economy. 29.6% of every person that lives in the top 100 metro cities in America are seriously delinquent on at least one bill. So a very healthy economy, record high inflation, high cost of living, sky high food prices, high energy bills. I've never seen anything less healthy than what we're in right now. And I mean, if you read all the comments, a lot of people are questioning it. A lot of people think that this is something worth looking into. So jobs report today, hiring surges past expectations. Bureau of Labor and Statistics added 353,000 jobs in January. But look at this. How many people were laid off in January? Jobs market strong. So why did layoffs double in January, right? You have to ask yourself this question. They say the numbers are great. Maybe they are. But let's look at this. Layoffs hit 10-month high as financial and tech companies slashed 39,000 jobs. This is one day ago Forbes. NPR, what's behind the tech industry's mass layoffs 2024? Microsoft lays off 1,900. Tens of thousands of workers lost their jobs in January. The list of layoffs sweeping U.S., Amazon, UPS. I mean, all of these companies are issuing massive, massive layoffs. Now, a couple of things to consider. 8.4 million Americans are now working two jobs. 8.4 million. So we could see a situation where some of this information should be looked into. Maybe some of these are acquainting for two jobs, three jobs. Some people are working side hustles, Uber, DoorDash, and then they have a main job, and then they have an online business. Maybe all of this could be factored in, possibly. Something worth looking into. But what I believe is going to happen next is I believe we are not going to see any rate cut anytime soon. Fed Chief Powell says a March rate cut is not likely one day ago. Key takeaways from the Fed's decision to hold rates steady. Federal Reserve meeting updates, interest rates hold steady. So when you start to see all this information and then you see that inflation rose in December, core inflation, which excludes the often volatile food and energy items, was expected to rise 3.8% year over year in December, following a 4% increase in November. However, core prices climbed 0.3% month over month in December at the same rate as November's increases, making year over year increases of 3.9%. So think about this. Inflation's going up. They forecasted 180,000 jobs being added. 353,000 is the number they present us with. How are we going to see a rate cut anytime soon? How? We're not. I believe we could see rates stay where they are right now maybe even, far-fetched possibly, but maybe even a 25-point basis hike sometime this year. It would not surprise me when they present this type of data showing that the economy is so strong and inflation is becoming very stubborn that they need to do something about this. It would not surprise me at all. And it says the Fed wants more unemployment. Jerome Powell keeps saying that, well, maybe we can reduce the number of unfilled jobs. So you think about this. We can reduce the number of unfilled jobs, the job vacancies, without anyone actually losing their job. But that's a bit harder. How do you reduce jobs without people losing their jobs? It doesn't make any sense. The Fed wants a higher unemployment rate because it brings down inflation. Business Insider, buckle up, America. Fed plans to sharply boost inflation or unemployment. So you start to look at all this information. You have to ask yourself, how are we going to see this rate cut anytime soon? And then the big question is, what happens with commercial real estate, office real estate, apartment buildings? You have $1 trillion and trillion plus in debt that has to get refinanced this year. If rates stay where they are right now, it is going to put so much pressure on regional banks, on landlords, on mom and pop landlords, people that own office properties, on real estate investment trusts. All of this weight is coming due. And if there's no Fed pivot, it's going to hit like an avalanche on the U.S. economy. It's going to be a really, really big problem. And so when you start to see, look at this, Fed holds rates steady, indicates 3 cuts coming 2024 a month ago. How's that looking, right? We're not going to likely see this. With Fed rates likely done, I don't possibly think that they are, Fed turns the timing of cuts. Now look at what Sam Altman said. Sam Altman, founder of OpenAI, ChatGPT. He's probably one of the brightest people inside of the tech industry. And what he said about the future of jobs, what he's saying about what it's going to look like being a business owner in the very, very near future, to me indicates we are going to see unemployment far above anything we've ever seen before. And just for context, in 1929, during the Great Depression, unemployment was roughly 22% in that range. Sky high, sky high. But if what he's saying comes true, it's going to completely change everything. I think what could possibly happen, this isn't going to happen 2024, 2025. So I want to be clear on that. This could happen 5, 6, 7 years from now. We're going to slowly move into this, what he's saying. So listen to this.
We're going to see 10-person billion-dollar companies pretty soon, like billion-dollar valuations. And the thing that in my little group chat with my tech CEO friends, there's this betting pool for the first year that there's a 1-person billion-dollar company, which would have been unimaginable without AI, and now will happen.
Think about that. A 1-person billion-dollar company. In the 1950s, 1960s, for a company to be worth $100 million, $200 million, they need 1,000, 2,000, 3,000, 5,000, 10,000 employees, right? And now in the 1990s, a company worth $1 billion could have 40, 50, 100 employees, maybe 200 employees. But some of these big tech conglomerates, imagine if a Facebook out there that has, tens of thousands of employees could be run with 20 employees, right? Think about the ramifications of what this would mean for supply chains, for the job market, for real estate prices, for the cost of living, for everything. We would likely see a very, very big change on social services all throughout America. We would see a lot of really, really big change. They predict 40% of all jobs will be impacted by AI and technology. It's very, very near future, next 4 or 5 years. And so you start to really pay attention to what's happening when they say that the job numbers are coming in at 353,000 and they're going to keep rates higher for longer. It's going to increase the cost for small businesses to borrow money. It's going to put more weight on consumers, on credit card debt, on adjustable rate consumer debt. It's going to put a lot more weight on the American people. It's going to put a lot more weight on the real estate market. So all of this weight's coming to a head right at the forefront of the fourth industrial revolution, where AI and technology is going to have a massive, massive, massive role on our economy. It's shocking that these numbers are what we're seeing now. 180,000 predicted, 353,000 added. What do you think about this? Do you think we're walking into what I would call a massive rug pull? You think about it. 4 years ago, roughly 4 years ago, we had a situation where 40% of all USD in America was put into circulation. 40% since the country was founded in 1776. Then record low interest rates. All this money poured into assets. Everyone was investing. Everything was, it was almost impossible to lose money. And then You see 13 rate increases back to back to back, essentially. The fastest rate increase we've ever seen on record as they pull money out of the system. What do you think is exactly going to happen? There's almost no way that we're going to see anything but a massive transfer of wealth and assets in this country, and a massive, massive transfer of wealth. What do you think about this entire situation? Drop below. Let's have a conversation about this. And if you'd like to fix your credit to position yourself for this massive wealth transfer, if you're thinking about getting a business loan, thinking about buying a business, buying a car, investing in real estate, you're going to need excellent credit, because defaults are going to continue to get worse and banks are going to continue tightening up on credit. So if you have any credit issues at all, go to greatcreditfast.com, click the link in the description just below this video, schedule a free strategy session for Monday, and I'll catch you next video.